Hi guys and welcome to a new video on my channel. Last time we discussed trends and trend structures, and today I want to show you how we can use a mathematical concept to identify key retracement points of these trend structures and how we can use these retracement points to enter trades. First of all, I want to show you the concept itself, or I will just tell the name of it, and if you want further information about the concept itself, you can search it up yourself on Google, but I want to keep it simple in the video and won't go in detail about the mathematical concept itself. But we will use the Fibonacci tool. That's what the concept is called. We will use the tool of TradingView to draw these concept into our charts so we can learn hands-on how we use it. First of all, I will show you on a drawn trend how I apply this concept or this tool to the chart, and then we will search for opportunity or for a retracement in the chart itself. But first of all, I want to dry run with you how I will use the tool in TradingView. So I will now, I already prepared an uptrend again, but I will also show you how the tool will look when you first draw it. You can customize it yourself and play with the levels around. I will explain to you later, but first of all, this is what you see on the chart when you first apply it on your chart. We have 5 different levels between 1 and 0. Um, but what really matters are 1 or 2 levels. That's up to the trader. You just have to backtest your strategy and look what level you will use. But in my case and my experience, the 0.618 level is the strongest, and most of the other traders will agree, I guess. And we will use this one to identify retracement points later. So I prepared a custom one. You can just you can also use this tool in the free version of TradingView, because I also use the free version of TradingView, and I just cleaned up my template a bit. So I have a saved template with only the 0.618 and 0.705. That's the 3 key points for me. I just drawn these 3, but if you yeah can work with other levels better, then just use the other levels. And first of all, I will now apply the 1 to the higher low, because now we are in an uptrend. So if I want to identify a retracement in an uptrend, so the higher low, I have to draw the line from an higher low to an higher high. So the most important thing is that the low is formed first, and after that there also has to be an higher high. So if this is not the case yet, you can use the Fibonacci tool, but if you see that the price starts to reverse, you can draw a Fibonacci drawing in the chart, and if it's keep reversing down, then you will at some point see that the price is going into our price range here. And we already talked about it in the last video, that trends are more likely to continue. So in this case, we also want to catch the lowest point of the continuing uptrend for our entry, because then we have a better risk reward ratio and we can get more profit. That's what we all want. So I want to get the ideal point in this uptrend. When I see, okay, we have an uptrend, I want to have the perfect point to enter into the trade, so I have the least amount of risk and the most amount of possible reward. So, and this, these points here are the perfect points for this scenario. So we will wait for the price to pull back down in here, and then long or apply or do a limit order in our trading software, and then we can use this one as a possible long entry. That's how we can use the Fibonacci tool. But important thing is that you first do the trend analysis, draw your support and resistance lines and stuff, and then you use the Fibonacci tool for entry scanning. Because if you have nothing else, and maybe you are longing a trend that's more likely to go down because it's a major downtrend and you just traded a retracement, then you have a problem, because then you may have issues to be profitable with this strategy or this concept. It's not a strategy as it on its own, but if you use some concepts together, they form a strategy most of the times. So now I want to show you how it's done in a live chart. I also use the chart that I used the last times when we identified the trends and drawn the support and resistance lines. So I will switch in the H1 chart. It's maybe a bit more clear, where we have to put our Fibonacci tools. For example, we can see, I will draw it again for you guys. So we started to have an uptrend here, and then we are in a little bit of a sideways market now. But to just look at this one, we have a really big gap up here, and now you can see, we should look into the smaller structure in here. That was my bad, because we have an structure over here where you can see the price is going upwards and then downwards again. So we have to look a bit more in detail for the Fibonacci tool. And here you can see we have this push up, and we can use the Fibonacci tool to draw in here, but it's not a good example, because in my opinion we just have to push above this lower high here to confirm that we are still continuing upwards. So here you can see that the level on itself is working, because if you draw the Fibonacci tool here and look at a 0.618, it reacted over here and pushed up, but it wasn't a good structure over here. So just leave it out. So that's also what you have to keep in mind. Sometimes your concepts are not working, because the market does stuff on itself too. So, but you still have to look at these occasions and look, okay, what can I do better? What can I avoid to lose money? So we could have entered the trade here, but it wasn't a nice opportunity to enter, in my opinion. Maybe if you are using a different strategy or different concepts and other concepts or smart money techniques, also some of them, then it's a valid entry. But in my case, it's not a valid entry because it's not a clear push um, up. So in this case, it wasn't a good one. But over here, you can see we have a nice downtrend with lots of movement. And here you can see in the initial push down here, we had a nice push down and then the price started to reversing because we also can use the Fibonacci tool to identify retracements for downtrends. So I will start at the top and the higher high here, the higher lower high here. So this one was formed after this high. So we have high, then here is the lower high, lower low, lower high, lower low, and then we want to take the lower high and put the zero of the Fibonacci retracement tool at the lower low, and you can now see we have a 0.618 level over here, and you can see price reacted on it. And then if the rest of it, for example, other key support or resistance lines are also in this area, like this one. I just have to draw it so you can see better. So if we draw a line within here, that's why I have 3 points here. You can just extend it to the right, and you can see we also had price reactions over here, yeah. And if you have something like this combo of an old support resistance area and then also an yeah an Fibonacci retracement within this area where you could have entered a short position, it's more likely to work than on other points on here because you have a strong old support and resistance zone and then the 0.618 retracement to enter short. And in this case, you see it worked and you could have banked some profit. There are also extensions on the Fibonacci retracement. It's not very visible on here, but I will change the color so you can see it. I will just uh, do it in red. I also have extensions here. What are extensions? Our initial move we measured was from 1 to 0, and if the price extends further down, we can use these two extensions. I have the minus 0.27 and the minus 0.62, but you can also use the 618, minus 0.618, and then you can see the price initially reversed at our entry point and then extended further down to the minus 0.62 level, and that's not only for searching for entries but also to determine how far the price will go and where to set your take profits. So that's a really cool and important thing to do, because if you just have an entry and don't know how long we have to stay into a trade, then yeah, we are not prepared for any maybe also retracements like over here, and or for the price to shift completely into the long um, if into the long sentiment. So that's how I use the Fibonacci tool to yeah identify my trading entries and also to identify my take profits. And maybe you will ask yourself, okay, we already know how we use this tool to identify an entry and take profit, but what's about the stop loss? So the stop loss is a different thing. There I will show, or there I will look if we have any key resistances in the area or old highs. You can just use this high, so the high we started to measure, where there is a 1 is of the Fibonacci retracement. That's what I use most of the times. But sometimes there is an even stronger a zone a little bit above it. So I will just use a wider stop loss then to give the price more range to work. But it's not a mandatory thing. That's up to you if you trade with a tighter stop loss or with a wider stop loss. So we will look onto some examples in another video, I guess, where we'll use it for a live trade or stuff like that. But for now, I will yeah, leave it here. And if you have any further suggestions what I should show you in the future, just drop it in the comment section. I will yeah, try to show you that. And for now, I'm finished and I wish you guys a nice day. Bye guys.